There's a type of ETF in Canada that pays zero distributions, not because it's losing money, because they've designed it that way. They're called swap ETFs, and they could save you thousands in taxes. I'm Brian, CPA, over 15 years in finance. The problem is when you hold stocks in a taxable or non-sheltered account, every dividend gets taxed, and even if you reinvest it at 35% tax rate, you lose over a third of your dividends every single year. $2,500 in dividends at 35% is $875 to CRA. You're losing out on that money. CRA taxes it anyways, every single year. How do swap ETFs actually work? Swap ETF, like HGRO, doesn't hold stocks. They hire a Canadian bank to do it. You invest in it. HGRO makes a deal with National Bank. Bank holds the stocks and receives dividends. Bank pays HGRO total return. Gains and the dividends are bundled together. Your units just grow, zero distributions. Dividends become the capital gains or an increase in stock value. Why would they do this? The bank pays 27% corporate tax. You'd pay 35%, let's say. When you eventually sell, its cap gains, which is only 17.5% instead of the 35%. Let's break down the math a little bit further. So $100K invested, $2,500 in dividends, 35% tax bracket. Traditional ETF tax now would be $875. If it's left compounding, it's $1625. Swap ETF, tax now is zero. Left compounding, it's $2,500. That's 54% more money working for you over time. Over 20 years at 6% growth, you actually saved $30,000 to $40,000. Now, there are some trade-offs to walk through. Options are limited. There's only basic indexes, no emerging markets or niche sectors, let's say. So someone still pays tax. Bank pays 25% plus charges plus 0.2% fee. That's still better than you paying 35%, and your tax drag is 1% per year. Swap cost is 0.5% per year. US withholding still applies. IRS takes 15% before dividends reach Canada. Who should actually use these? Consider using them or looking at them. If your TFSA and RRSPs are maxed out, you're investing in a taxable account and you're in a higher tax bracket. If you still have room in your TFSA, just use that. That's it. Defer tax, convert dividends to cap gains, so you keep more of your money at the end of the day. Please like and follow for more content like this.